Consumer confidence unexpectedly crashed to new lows because apparently people are worried about the economy going down again and losing their jobs. What's up everybody, I am Jasprit Singh from theminorityMindset.com and welcome to the Minority Mindset. Consumer confidence is an indicator that Wall Street and the government look at to determine how strong the economy actually is because the stock market doesn't give us a very clear picture. You could think of consumer confidence kind of like how optimistic people are about the economy. So when consumer confidence is high and people believe in the economy, they'll be more likely to go out and spend money and buy things, and this spending spurs business, which spurs the economy. So the whole economy grows when consumer confidence is high. When consumer confidence is low, that means people are worried about the economy, so they're less likely to spend money, which means businesses are going to be making less money, which means you're going to see the economy slow down and more job losses. After all the growth we've seen in the economy and the stock market since this pandemic started, everybody expected that consumer confidence would be recovering. But that didn't happen. Turns out consumer confidence crashed to new lows in August of 2020. Apparently, Americans are worried about losing their jobs, they're worried about the economy crashing, and they're worried about a second wave of this recession. To make matters a little bit more interesting, the Fed is kind of freaking out about the economy, so they said that they're going to keep interest rates low for a long time. And they said that now they're going to start hiking up inflation to combat this economic recession, which means your extra guac might become a little bit more extra. Inflation is what causes the price of things to go up. So this is your vacations, your rent, your groceries. And so now when the Fed says that they want to increase inflation, that means they want to increase the price of things, and they want to do this to prevent the economy from melting down. If that doesn't make sense to you, let me put it this way. Inflation benefits the people who understand it, and it hurts the people who don't understand it. That's why it's called a hidden tax on people, because for the majority of people, inflation is making them poorer without them even seeing it happen. With more inflation, your savings have less buying power and your earnings aren't worth as much, and you can see a bigger divide between the rich and the poor, but the people who understand money will get richer. That's why in this video, I want to give an update on what's going on with consumer confidence and the economy. That way you can make smart decisions with your money. But before we get into that, hit that thumbs up button below, because if you don't, then YouTube won't share our video with anybody else. Subscribe to the Minority Mindset YouTube channel, that way you don't miss any of our new financial news and education videos every single week. And hit that little notification bell too, because if you don't, then YouTube won't let you know when our new videos are released. I've talked about this before, so I'm not going to spend too much time re-explaining this, but our economy runs on spending. When you go to work, you make money. And now when you have money in your pocket, you can go out and pay your mortgage or your rent. Then you can go out and buy a nice shirt. You can go out to a nice restaurant to eat, and you can go and buy a nice car. When you do this, when you go out and you spend your hard-earned money, you are financially supporting a landlord or your bank. You are financially supporting a clothing store. You are financially supporting a restaurant company, and you are financially supporting a car company. When businesses make more money, then they can reinvest this money back into their business by growing new plants and renting new office space and hiring new employees, and this helps grow the company. So the more money you spend, the more money somebody else makes. The more money that businesses make, the more money they can reinvest back into their company, the more they can pay their employees like you, and the more the economy expands. I'm not saying this so you go and take your life savings and dump it out to Gucci, that way you can support the economy. I'm saying this so you understand how the system works. There's a difference between understanding the financial system and managing your own personal finances. Now, the reason consumer confidence matters is because consumer confidence determines how much money people spend. So right here at the top of the funnel, you make money, and if you don't have confidence in the economy, then you're not going to spend money. And if you're not spending money, businesses aren't making any money. If businesses aren't making any money, that means businesses don't have money to hire more employees, so people lose their jobs, and so the economy shrinks. Part of the reason for this sudden consumer confidence crash might be because some people believe that our economy, or at least our stock market, recovered too big too fast. You have economists worried about a double-dip recession, and you even have members of the Fed worried about a double-dip recession. If you're unfamiliar with the term double-dip recession, it's not when you take your chips and you try to dip it into the last bit of guacamole twice. Come on, guac, don't recede on me now. A double-dip recession is when the economy goes into a recession and then comes out of a recession with what Yahoo Finance calls a snapback in growth, but then the economy goes back to negative growth. Economists have this theory that, okay, our economy crashed in March, April, May, and then June, and then July, August, September, and maybe early October, our economy will recover, but then October, November, December, our economy is going to start shrinking again. There's a few reasons why economists are predicting this double-dip recession, and none of them have to do with a guacamole shortage. First is free money going away. When this pandemic first hit and our economy stopped, we were put on life support as an economy. So we were given unemployment programs and stimulus checks and bailouts, and now the economy is opening back up and it's open for the most part around the country, but there's still a lot of free money floating around. Eventually, you have to imagine that this free money is gonna go away. Once that happens, once people stop getting unemployment checks, and once people stop thinking about stimulus checks, and once businesses stop getting blank checks from the government, that's when our economy is gonna be put to the real test. When there's less money floating around, people are gonna have less money to spend, so naturally the economy might slow down because of that. Second are the businesses that won't make it alive out of this pandemic. Restaurants and retail stores have been going bankrupt left and right across the country because of this pandemic and economic crisis, and this by itself is going to have its own economic effect on the economy because millions of Americans are permanently out of a job because their businesses have permanently shut their doors. But the secondary part of this business shutdown dilemma is the real estate market. When you have all these restaurants and retail stores shutting down, that means they are no longer paying rent to their landlord, which means this landlord is not making money, which means we could see a wave of landlord foreclosures. Like right now, it's estimated that 1 out of 4 malls in America will be completely shut down within the next 5 years. And on the consumer side, we have some tenants protesting, saying things like, okay, if we don't have a job, we shouldn't be charged rent. And now if your landlord is not getting paid rent, whether it is an apartment complex or a shopping mall or a restaurant, then this landlord's not going to have money, and if they do not make their bank payments, the bank is going to foreclose on the landlord. Third is potential euphoria taking over the markets. You don't need to be a rocket scientist or Warren Buffett to understand that the stock market is detached from reality. Now, here's the thing. The stock market doesn't need to directly mimic the economy, especially in the short term, because the stock market is a place where investors go to invest their money based off of what they think is going to happen in the future. But when people start investing their money, not because they think that this company is going to make more money in the future, but because they think that the stock market can't go down, that's when euphoria starts to kick in. So you want to pay attention to how fast the stock market is growing relative to the economy, because if the stock market is growing at a speed 10 times faster than the economy, then you have to think that eventually reality would kick in. Right? This doesn't mean that you shouldn't be investing your money, okay? That's not what I'm trying to say. This means that you need to be doing your research before you invest your money. Don't just throw your money into a company because you think, wow, this company has been going almost straight up. Look at the numbers. Make sure the numbers make sense. Our economy is in a weird position, and you need to be the person in charge of your money and your finances based off of your goals. That means don't just listen to whatever Bunty's doing, and don't just blindly listen to some random guy on YouTube. Who you calling random? Jasprit? Recessions make more millionaires than any other time. So I want you to use this as an opportunity to be money smart and find the opportunity in this crisis. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you want to learn more about what you should be buying during this 2020 crisis to build wealth, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.